Hello student, one more questions about the valuation of goodwill. So let me explain the question, then I will solve. Here it is written, calculate goodwill of the firm on the basis of 3 years purchase of the weighted average profit of the last 4 years. So this question is related to the weighted average. The profit of the last 4 years here it is given 2012 20,200, 2013 24,800, 2014 20,000 and 2015 here it is given 30,000. The weights of each year 2012 here it is given weight it is given 1, 13 here it is given 2, 14 here it is given 3 and 15 here it is given 4. This is the weight. So here it is written, you are supplied the following information. What is written you see now? First point, on 1st November 2014, clear, a major plant repair was undertaken for rupees 6,000, which was charged to revenue. Means this is the meaning. 1st November 2014, a major plant repair was undertaken 6,000, which was charged to revenue. The said sum is to be capitalized. It was treated as revenue. Clear? Now it is given. The said sum is to be capitalized for the calculation of goodwill. Now we have to treat it for the calculation of capital nature for the treatment of goodwill. Subject to adjustment of depreciation at the rate of 10% per annum. And its depreciation will be 10% per annum on reducing balance method. That means written down value method. This is the meaning. Clear? So let me explain again. Here it is given 1st November 2014. A major plant repair was undertaken rupees 6,000, which was charged to revenue. Means it is already treated as a revenue nature. And the question is saying the said sum is to be capitalized. This said sum means the 6,000 now it is to be treated as capital nature for calculation of goodwill. Subject to adjustment of depreciation, for which depreciation will be calculated at the rate of 10% per annum on reducing balance method. Clear? Then second point, the closing stock for the year 2013 was overvalued by 2,400. Overvalued means actual value is less but it is shown more. So if the closing stock will be more, no doubt the gross profit, the profit it will be more. Because closing stock it is shown on the credit side. If credit side value will be more, no doubt the profit it will be more. Clear? That is overvalued. Third point, to cover management cost and annual salary of rupees 4,800 it is made for the purpose of valuation of goodwill. Means before that it was not provided. Now 4,800 is to be now treated for the valuation of goodwill. So now I am going to solve this question. Clear? So I am going to, that means explain it. This is the answer. Answer it is. So first I will explain with the help of the table. Because 4 years profit it is given. So let me explain the 4 years. 4 year profit, let me explain first. That is 2000. That is 2015, then 2014, 2013, then 2012. Clear? So let me explain, because we are going to adjust the profit. So let me explain. So I can write it here, calculation of adjusted profit or adjustment of profit. Calculation of adjustment of profit or adjusted profit. Adjusted profit means now profit will be adjusted. Clear? So here I am writing the year 2012, 2013, 2014 and 2015. Clear? So What is the profit? Here it is written profit for 2012. Clear? That means profit is how much? Profit here it is given for 2012 20,200. Clear? And 24,800. 24,800. Then 20,000. Then here it is given how much? 30,000. Clear? So now we have to add, that means adjust the management cost, means salary less management cost, because before that it was not treated. So management cost means annual salary less management cost. Management cost means 4,800 we have to deduct from each and every year. 4,800 we have to minus it. 4,800. So what will be the value now after deducting 4,800? It will be 15,400. It will be 20,000. It will be 15,200. 15,200, and it will be 25,200. Clear? Now I have to write it here. I already told you that on 1st September a major plant was repaired and whose value was 6,000. That was treated as revenue. Now it is to be treated as capital nature. So means if we will treat it now capital nature, means now the profit it will be increased, because before that we shown it on the profit and loss account. Now we will not show it. So whenever we will not show it, means no doubt the profit it will increase. So we have to write it capital nature treated as revenue nature. We will write capital nature treated as revenue nature. Capital nature treated as revenue nature. Treated as revenue nature. Clear? In which year? That means it is already given September. That means 2014. So in here in 2014 we have to, that means add here. Clear? So now the profit it will increase. So after adjustment, that means what is the profit now? So 2012 the same profit it will be 20,000. Here it will be 21,200. Here it will be 25,000. Clear? And here it is given. Means depreciation is to be charged 10% per annum. Depreciation. So you see now here it is mentioned that means the accounts closed on 31st March. So it is treated as calendar year. Calendar year means 31st December. So 1st September, so September, October, November, December. So 4 months, that means depreciation will calculate. So that means depreciation amount is written 10%. Clear? So first we will calculate the depreciation amount. So we will write let depreciation. Depreciation 6,000. I am calculating here 6,000 10%. It will be 600 yearly. Clear? From 1st September, October, November, December. So 4 months. So 600 into 4 by 12. So it will be 200. Clear? So depreciation it will be charged. So why I am taking, that means up to December, because this question does not mention that the accounts close on 31st March. Clear? And year it is given 12, 13, 14, 15 like this it is given. So it is treated as calendar year. Clear? Means up to 31st December. Instead of like this, if it would have written 11, 12, 12, 13, 13, 14, 14, 15, then in this case we that means have to treat it up to 31st March. So depreciation here I calculated it is 200. So here it is 200 less. And it is saying that it is reducing method. The first year, what is the value of the machine? 6,000. First year depreciation 200. What is the net value? 5,800. So 5,800 10%. For next year it will have 580. So next year depreciation will be 580. Clear? So less. So after charging the depreciation, what is the net value or profit? So here 15,400, here 20,000, here it will be how much? 21,000, here it will be how much? 24,620. Clear? Now about that means now here to get another point about the overvalued of closing stock. Overvalued means the actual value is less but it is shown more. Clear? So we have to, now the profit it is increased, so we have to reduce it now. Now closing stock, if you will reduce it, so profit will also be reduced. So you can write it less overvaluation of closing stock. Overvaluation of overvalued of closing stock. Overvaluation of closing stock. You see the year, on which year closing stock? Here it is given 2013. So in 2013, so profit it will be reduced. Clear? But in the next year it will be reduced 2,400. But the next year, that means the closing stock, it will be increased. Closing stock overvalued means here it is given, that means it was showing more. The value is less. So this year closing stock, it will be the opening stock of next year. Means next year opening stock value it will be less. So whenever the opening stock value will be less, next year that means the profit it will increase. Clear? So we can write it here. It will be 15,400 only. It will be 17,600. It is 21,000 and 24,620. Clear? So next year, that means our valuation of, that means opening stock. Our value of opening stock. So next year profit it will be increased. Clear? Remember one thing, if undervalued it is given, its treatment will be just opposite. Clear? So after doing this adjustment, what is the net profit of each year? You will find it for 2012. It will be 15,400. For 13, 17,600. For 14, it will be how much? 23,400. And here it will be 24,620. Here it is given. Clear? So after that, here it is given the, what are the weight it is given. Clear? So I am explaining here only weight. This is the profit. Now weight it is given. Weight it is given. weight how much? Here it is given already 1, here 2, here 3, here 4. So already that means if weight it will be given, means it will be multiplied with the profit. Clear? So it will be 15,400. It will be how much? 35,200. Clear? And it will be multiplied by 3. 70,200, and it will be multiplied by 4. 98,480. Clear? So now we'll calculate the weighted average profit. We'll calculate the weighted average profit. This is the profit. Clear? So average, weighted average profit. Weighted average profit. Weighted average profit. So whenever we'll calculate weighted average profit, we have to add all this profit. 15,400 plus 35,200 plus 70,200 plus 98,480 divided by, don't divide by 4. Whenever weight it will be given, you have to add the weight. 1 plus 2 plus 3 plus 4. It will be divided by 10. Clear? So how much amount first we'll calculate it. It will be 8. So there. 2,19,280 by 10. So average profit it will be how much? 21,928. This is. So what will be the value of goodwill? Goodwill will be calculated. Here it is given 3 years purchase. First at the first line 3 years purchase. So goodwill equal to weighted average profit into number of purchase year. Weighted average profit how much? 21,928 into number of purchase year. First sentence it explained, it gave number of purchase year is 3. So you multiply by 3. So if you multiply it, 65,784. It will, that means it is the value of the goodwill. Clear? So this is, that means different treatment in this question I explained, and I hope all of you got it. So in the next video I will explain about the super profit method.